Hi, everybody. Welcome to the Jimmy Dore Show. I'm here with the miserable liberal and Ron Placone.
Hello.
I'm miserable.
So guess what? We had good news on Friday. We got a jobs report. Jobs report was great. It was great. Everything happened, good stuff. And then on Friday, this happened.
Worst drop since the Trump presidency. In fact, it's the worst in 2 years.
That's right. The stock market took a plunge on Friday, February 2nd. Right, here we go.
The Dow fell 665 points. The Nasdaq lost 144. The S&P 500 lost 59. Altogether, it's a nearly $1 trillion decline for the week, a far cry from one record high after another.
So that was Friday. And then today, Monday being February the 5th, this happened.
A live look at the big board right now. And right now, it's down over 1,000 points at 24,451. Now, that's actually a little bit of a rally. At one point today, it was as low as 1,500 points. Overall, at one point, that drop still at...
Overall, at one point, it was 1,600 points, the biggest intraday point drop in history. That happened today, February 5th, Monday. So it ended up there, plunging 1,175, but that was on the heels of what happened Friday. Now, why did this all happen? By the way, according to CNN, the sell-off wiped out the Dow and the S&P 500's gains for the year of 2018 and left the Nasdaq barely in positive territory for 2018. Many investors have been bracing for a pullback for months. I didn't know that. As the stock market, I don't know anything about the stock market, as the stock market minted record high after record high with investors encouraged by solid economic data and corporate earning prospects, the latter bolstered by recently passed U.S. corporate tax cuts. Okay, so the stock market's been going gangbusters. And then Friday's January's jobs report sparked worries over inflation and a surge in bond yields, as well as concerns that the Federal Reserve will raise rates at a faster pace than expected. Wait a minute. Then CNN says if the economy gets much stronger, it could touch off inflation, which has been mysteriously missing for 9 years of the post-crisis recovery, which is why people don't save money anymore. You don't get any money for saving money. That's why everybody's putting their money in the stock market, because you can't you put your money in the bank, you lose money. There's no interest rate there. That could force the Federal Reserve to raise interest. So they're also saying that, Huffington Post and CNN. People are dealing with the shock of seeing real inflation for the first time in a while, said Bruce McCain, chief investment strategist at Key Private Bank. So, but wait a minute. I thought now Yahoo report their jobs report was great. Here's the jobs report. The U.S. Bureau of Labor Statistics January 2018 jobs report released Friday contained almost uniformly good news. The American economy added 200,000 jobs, beating economists' expectations by more than 10%, and the unemployment rate held steady at 4.1%. Perhaps the most exciting jobs report number was the wage growth, which continued through January for a rise of 2.9% over the preceding year. So wage growth was 2.9%. That's pretty good, close to the Federal Reserve's target of 3% or more. That's the fastest annual wage growth since 2009, which came right on the heels of the big stock market crash or economy crash. And it follows years of stagnant wage growth, meaning there hasn't been any wage growth, stagnant wage growth, that has exacerbated income inequality and arguably fueled political turmoil in the U.S. So since the crash, the 1% has been making money hand over fist, and everyone else is still scraping at crumbs, right? So that's the neoliberalism at work, right? But guess what? So guess what this does? So wage growth, guess what wage growth does? So things are good for workers. That's bad for Wall Street. What? Do you get this? Wait, what? Did you hear this? Yes, because if there's good wage growth, that would in turn divert capital. I mean, because then there would be inflation. That would in turn divert capital from the stock market into bonds. And that scenario may partly explain why January's strong jobs report was followed by a broad stock sell-off, with the Dow Jones Industrial Average dropping by more than 2.4. So we get a strong jobs report that says wage growth is happening for the first time since 2009. All of a sudden, stock market crashes. Wow. Boy, we've said before that the stock market is not tied to the real economy, but do you need a bigger example of it than this? In fact, get this. It could be bad for stocks, meaning the wage growth. It could be bad for stocks, though. As Minneapolis Federal Reserve President Neil Kashkari explained to CNBC, wage growth will strengthen the case for interest rate hikes by the Fed. And interest rate hikes would in turn divert capital from the stock market into bonds, which is why a strong job market causes a stock sell-off. Are there talk about perverted incentives in a capitalistic scheme? Am I wrong about this?
Yeah, it's almost like to kind of put it real simply, it's almost like the stock market is the opposite of me as an individual. Like, I'm like, oh man, there's going to be even easier ways for corporations to avoid taxes. That's terrible. But Wall Street's like, yes, invest. And then it's like, oh man, there's more money in the pockets of the workers. That's great. And it's like, oh, get your money out.
That's horrible for us.
That's terrible.
That's horrible for Wall Street. So this is this upside down backwards. This is capitalism. when strong wage growth actually signals a sell-off on Wall Street, a panic. Oh my God, things are going to get bad. Why? Workers are making money. That's what happened just now in our economy. And so there's nowhere else to put your money, by the way. So if you want to put your money into a retirement, you have to put it into a 401k, or you're going to get whacked in taxes and everything else. So they got you. And if you put your money in the bank, there's no interest. So they got you. That's why you got to put your money into that goddamn 401ks, which I'm not a fan of. And Warren Buffett says that the smartest hedge funds, nobody beats an index fund. Which an index fund is you put your money in, and you have, however the stock market does, you'll do, right? And it's a long-term investment. You have to invest in the stock market over the long term. So anyway, getting back to this, I don't know. I've seen a few reports talking about what happened. Nobody's really mentioning what we just did. How perverse of a system is that? That wage growth for workers signals a panic on Wall Street and a sell-off, and the stock market starts crashing, biggest in one day ever. Isn't that something, Steph? What is that? Doesn't that make you, I don't know, maybe if you have
we've talked about this before. I can't stand having to invest retirement money into Wall Street.
I hate it.
Because they always tell you, hey, you know what? You're not looking for an overnight kind of like money-making scheme. You've got to wait years or decades. And isn't it kind of the roll of the dice which decade I'm going to take out?
Well, that is a roll of the dice, Steph, because the people who wanted to retire in 2009 and they had their 401ks built up for 15, 20, they got screwed. There was nothing in their 401k, right? So when the stock market crashed, they got screwed. So it all came back. It took 10 years, or I don't know how long it took for the stock market to get back those people's 401ks. But I do know after the stock market crashed in 1929, the stock market didn't get back to its 29 levels until 1953. So this next crash that's going to happen, by the way, we've had nothing but a bull market, meaning we haven't had a recession in 9 years. What was the last one? That was 2008, right? Mm-hmm. So going on 9-10 years. So they say the business cycle is you're going to have a downturn inside of every 10 years. We haven't had ours yet. Here it comes. So I think, again, I'm not when I say I'm not an economist, not that economists know what they're doing either, because if they did, somebody would have warned us about what was happening in 2008, and they didn't. Right? So all the smarty pants guys missed it, okay? Except for there were a few that got it. So I went to our good friend Mark Blythe's Twitter feed to see what he says about it. He's a guy who coined the term global Trumpism, and he gave some good insight into the Brexit and the Trump election and about the. Anyway, I went to his Twitter feed, and he hasn't said anything about this yet. I went to Dr. Wolf's Twitter feed, and he hasn't said anything really about it yet. So here I am putting together my own ideas. Isn't that something? And so I thought it was just. I just think it's crazy that we get a strong wage growth report, and the stock market tanks. So capitalism does not seem to be fulfilling the needs of the people in the United States or Europe. So
I just still don't understand how Wall Street just isn't this huge casino.
It is.
I just don't.
That is what it is,
right? And I don't understand why I'm supposed to have trust in this. And I'm not. Is there any other choice for me to put retirement funds somewhere else?
I know. That's why I feel handcuffed too.
And I'm just worried that like Jeff Bezos and Jamie Dimon and Warren Buffett are going to go, "Hey, are you tired of your money in the stock market?
Yeah, put
We've
your
got
money
some
in.
ideas for
We
you."
got our own stock market. You buy stock at our stock market. Yeah, I know. It's going to be Amazon stock. Anyway, so all right.
Arno's going no way. No.
Amazon Wealth Management.
Ah.
That's coming next. But no, I mean, they do sell you the delusion of safety.
Yes,
I mean, they really
no
do,
doubt about
and
it,
that's
Ron.
just what it is.
So there you go. I wanted to get this. I'm sure it's going to. We'll see what happens tomorrow at the stock market. So by the time this video goes, this story might be old news. I hope not. But that's interesting. I think you're not going to see that point made anywhere else than maybe a show like this. So you know that February 24th we're going to be in San Diego doing a live Jimmy Dore. Doing live stand up. In February in San Diego. Also, March 25th, we're at the State Theater in Austin, Texas. Or February 16th, we're in Burbank at the Flappers Comedy Club. There's a link for tickets right there. Please make sure you're subscribed. As we tell you, they're unsubscribing people from shows like these. Even if you think you're subscribed, please check. And then if you aren't, please resubscribe and hit the bell. Click the bell so they'll give you a notice when we drop a video. Thanks for your support.